We've had a pretty interesting week for Nvidia. The stock is sitting at $113 as I am recording. In the past 5 days, the stock is down roughly 6%. And I want to say this upcoming week, we have a lot of big earnings. And I think investors should keep a closer look at these few companies that are reporting this week, because I do believe they're going to give us a lot of insight of how the stock is going to be acting before earnings. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so we can see from this calendar that we have a lot of semiconductor companies reporting this week. We have AMD on Tuesday. On Wednesday, we have kind of full load ARM, Qualcomm, and Lam Research. And on Thursday, we have Intel. So in forms of AI chips, I do believe the two biggest players are obviously going to be AMD, because AMD is the closest number two in the AI chip market right now. So if we see some growth for AMD in the MI300X, they're going to give us, I think, the closest representation of how the AI market is doing right now. So I think AMD is going to be very, very important. Intel also has their Gaudi 3 AI accelerator, so very similar to AMD, they could share some insight. I want to say Intel is very far behind in this AI chip race. That not necessarily if it's happening to Intel, it means it's happening to everybody else, but it still kind of gives us a great data point. ARM obviously is important because this is what Nvidia uses for their CPU solution, the Grace, which is used in the Blackwell and the Hopper architecture, and what they're going to use for their upcoming Rubin-based CPU as well. I'm completely blanking out on the name. Now, while I do believe these two stocks, especially AMD, or these three stocks, are going to be important, I think what's going to be more important for Nvidia is going to be Microsoft, Meta, and Amazon. So these are reporting on Tuesday, Wednesday, and Thursday. And these are the top customers of Nvidia's AI chip solutions. So we have to really understand what they're seeing in their capex. Are they increasing? Are they slowing down? What are they seeing with AI revenue? And that is the question, because this is what we kind of got from Google. And maybe from Google, we might have felt like there was some hesitation here and there, but we want to see confirmation from all these other cloud server providers if the demand is still high, because this is what Nvidia is pretty much banking on. Nvidia is banking on these cloud server providers spending a lot of money on AI chips. So we're going to look at the following. First, we're going to look at Google, what they said last quarter, and how that changed from this most recent earnings to see if there's any kind of major changes that investors should keep a closer eye out. Then we're also going to look at what Amazon, Microsoft, and Meta said in the last quarter, so we understand what to expect this quarter. So let's continue here with Alphabet. And before we go any further, guys, I do have a special offer on my ebooks. I have two ebooks, a handbook, which just explains all these different public companies in the semiconductor space, over 50 plus, and earnings insight for this upcoming quarter. So if you want to learn more, there special offer if you buy both of them, $20 off automatically. Check out moresemiinvesting.com. Both of these are living documents, so if you do purchase now, every time I update them, you will get a new email with the updated version. And obviously that makes sense with more earnings coming out for the semiconductor space in the upcoming weeks. So stay tuned, enjoy them, and thank you for the support. So first, let's look at Alphabet, aka Google's last earnings call that happened on April 25th of 2024 for quarter one of 2024. Right, so this is their previous quarter. So when we saw with respect to capex, they reported about $12 billion last quarter, once again driven by the investments in large infrastructure, especially for data centers due to the AI market. They mentioned that they expect the upcoming quarterly capex throughout the year to be roughly at or above quarter one level, keeping in mind that the timing of cash payment can cause variability in this capex. So that's very important to understand, right? Because these AI chips and a lot of these data center solutions sometimes might have a small supply chain issue. There might be a quarter where capex might be a little bit below, but they're for sure going to spend it in the next quarter. But here we can see that last quarter they spent $12 billion in quarter one, and they mentioned for the upcoming quarters is going to stay within those levels. Now, if we take a closer look at quarter two earnings call, which has happened a few days for Alphabet, we're going to see if there were any changes here with capex. And very similar, remember last quarter that I mentioned that it was going to be within 12 billion or higher for the upcoming quarters. And for quarter two, they actually spent $13 billion in capex, again, driven by the overall investment in technical infrastructure, aka AI chips. Looking ahead, they continue to expect quarterly capex throughout the year to be roughly at or above quarter one capex of $12 billion. So here we haven't seen any changes in capex of what we saw, but remember, capex has increased dramatically throughout this year. So staying within this level is going to be pretty amazing. I mean, 12 billion times four, that's what, around 48 to 50,000, $50 billion just on capital expenditure, mainly on AI server solutions from one customer. So if a good portion of that goes to Nvidia, obviously we can see this huge growth rate if just 4 customers spend around this money. But I think from Alphabet, the first thing we are seeing is that, hey, look, we're still staying with those elevated levels. Now, unfortunately, I'm guessing investors were maybe hoping that Alphabet would increase their capex dramatically, but I don't think we're going to see much jump from here. I think what we're really looking is for them to stay at exactly what they mentioned last quarter. The other thing that I do want to say is very important about this AI chip investment is many people are wondering if companies are over investing. And the CEO of Alphabet, Sundar, mentions that he thinks that one of the way of thinking when they're going through a curve like this, and when he's talking about this curve, he's talking about this technological shift in AI. The risk of under investing is dramatically greater than the risk of over investing. Even in a scenario where it turns out that they are over investing, these infrastructures will be widely used for them. So there's, in the end of the day, no real true fear of over investing here in the AI chip market, because these AI chips can be used to do so many other things. And as we heard, there's so many solutions out there and so many data centers out there that are not accelerated. So this is just a way that, hey, you're seeing both the boost of AI and data center acceleration. So I think this is what we're going to continue to hear from most CEOs, that, hey, look, right now, for them to maintain this leadership in the AI market, they're going to need to continue to invest pretty heavily, which obviously bodes well for Nvidia. Now, if we take a closer look at what Microsoft said last quarter, and remember, Microsoft is expected to report on Tuesday. So Microsoft's last earnings were their quarter three of 2024, which they reported March 31st of 2024. So their calendar year is a little bit different than their fiscal year. And during their earnings call last quarter, they mentioned that capital expenditure, including financed leases, were about 14 billion to support their cloud demand, inclusive of the need to scale their AI infrastructure. So kind of those similar low teen values that we saw with Google as well. Now, Microsoft did mention that they expect capital expenditure to increase materially on a sequential basis, driven by cloud and AI infrastructure investments. Very similar to what Google mentioned, that the normal quarterly spend kind of could change throughout the quarter depending on when they pay things out and when infrastructure gets built out. So even if we see a bit of a weakness or some form of lower numbers here in capital expenditure, throughout the year, we want them to maintain this same type of tone. So here, I want to say for the upcoming Microsoft earnings, we're expecting at least maybe more than $14 billion in capex to be spent, and to kind of continue to see that, hey, look, it's going to continue to go up every quarter. And then they started talking about fiscal year of 2025, which will be right now what it is beginning. And they mentioned fiscal year of 2024 capital expenditure will be much higher than fiscal year of 2024. So again, this is the tone we're going to want to hear from Microsoft during the earnings. And there was a question during the last earnings call that kind of talked a little bit about, hey, look, you guys are ramping up so much in infrastructure and capex. How do we see this as a big picture? And the CEO of Microsoft pretty much said very similar to what Alphabet CEO said this previous earnings, that right now, if you want to make sure to be the leader in this position, you need to invest a lot in training. And that's what these kind of big players are doing. Microsoft is trying to remain the leader here in the large language model with OpenAI and with their own model as well. So for them to do that, they're going to need to continue to invest very heavily in AI chips, because like we saw from Sundar in Google, the risk of underinvesting is much higher than overinvesting. And the reason is here, if you start to underinvest in AI solutions, in AI chips, in accelerated solution, then you're gonna start to bleed market share in the clouding market as all these other players continue to invest heavily. So that's why it's such a big risk, because if you start to lose market share, that's where things get sticky, because it's gonna be much harder to grab that market share than it is to losing it. Now we have Meta on Wednesday, the big AI company that doesn't do cloud storage solution for the public, but they do have a lot of AI solutions in general. So they mentioned in anticipate to their full year 2024 capital expenditure, it will be in the range of 35 to 40 billion dollars, increase from their prior range. So they did increase it again. Again, I don't believe we should see more increasements from capex right now, because we just kind of saw that. I think what investors should really focus on are that the numbers they mentioned last quarter are what they continue to say. We do not want to see a decreasement, but I wouldn't really necessarily say we need to see an increasement in capex. Now they even mentioned, while they're not providing guidance for years, they do mention that they expect capex to continue to increase next year, in fiscal year 2025, as they invest aggressively to support their ambitions in AI research. So again, AI still needs heavy investment, especially if you want to be the leader in this space. Now, Amazon, which is reporting on Thursday, also did share some insight. Now, Amazon has been a different player here in the AI space, but obviously they still invest a lot in Nvidia chips. So their last earnings were April 30th of 2024 for their quarter one of 2024 earnings. And here they mentioned they expect the combination of AWS reaccelerating growth and the high demand for Gen AI to meaningfully increase year-over-year capital expenditure in 2024. They mentioned that in quarter one, they had about $14 billion of capex, and they expect that to be the low quarter of the year. And just to put things in perspective, right, just the numbers that we were looking, Google was somewhere around $50 billion, Meta was closer to $35 billion, so that's $85 billion. Amazon right now with $14 billion a quarter, that's closer to $60 billion a year, and Microsoft is over around the same thing. So that's 60 plus 80, about $200 billion in capex just from this big tech giants. Obviously, Nvidia doesn't get all that money, but they are going to get a nice amount of the pie. And if this overall capex is increasing on a yearly basis, this is why investors are very, very excited for the potential of Nvidia's chip solution. So like I mentioned, I think those three companies are going to be the biggest information that we get for Nvidia's potential revenue estimates for this upcoming earnings. Again, I don't necessarily say that we need these big tech giants to increase capex. We've already seen them increase it dramatically. What we need to see is for them to maintain that tone that they had last quarter, where this is where they're going to continue to invest. If we start to see maybe any weakness of hey, look, maybe we might slow down in capex, maybe AI is not going as fast as we anticipated, that's when they will consider some red flags for Nvidia. But if that doesn't happen, I think we're still green light for this upcoming earnings, especially if AMD gives us a nice strong information of what's happening in the AI market. So let me know, what are your thoughts? Should I do a video on any of these companies that report earnings? Let me know in the comments below. Take care, have a good day, and see you next time.